Hello, everybody, and welcome to another episode of Market Masters. I've not done one of these with Kirk in quite a few months because I've been away, but we are back. Kirk, I want to say thank you very much for your time today and just being here with us.
It's my pleasure and welcome back. I
Thank
hope that your journeys with everything you were doing were better than you hoped for.
100%. So we got a lot to cover today. Ever
Yeah.
since we spoke last, silver has boomed. I mean, last time we spoke, I think it was around the $33 mark. Now it's always going between 38, 39, and it only looks like it's going to be going higher. So today we're going to be speaking about the Stablecoin Genius Act, what's going to be creating more demand for the dollar, and a new executive order that will actually most likely impact the stock market, bring more people to silver and gold, amongst other things in this
Yeah.
case. So, with that, Kirk, why don't we just dive in? Give us the deep down understanding of what's going on so people could take action if they want to and allocate their resources, finances into the best
Yeah.
possible places.
I mean, first thing to address what you just said, we've gone from like 32 to 38 since the last time we spoke. That wasn't like a year ago, right? I mean, it was like 3 months ago.
Yeah.
So what we're seeing in the markets is absolutely extraordinary in the sense of uh, we've talked about this numerous times. It's just common sense, but when you have low supply and high demand, prices are going to go up,
Yep.
right? So I've been having increasing conversations with big trade desks around the world. People who work at them. It's like, Kurt, what we're hearing about COMEX running out of supply, LBMA running out of supply, it's absolutely true, right? It's like they're having a hard time sourcing metals
Yep.
for what's to come. Now, to put this into perspective, 2 weeks ago or so, or maybe it was 3 weeks, time's flying, right? But Trump slapped another tariff on Switzerland,
Okay.
39%, right? So it's like Switzerland, what is that going to impact like fancy chocolate or what? It's like, no, it will, right? But what comes from Switzerland is a lot of refined bars on the gold side, 100-ounce bars, 400-ounce good delivery bars, right? That central banks and big, massive hedge funds, international money center banks actually store, right? They store these things. They're not used for barter or anything like that. So what happened was when this tariff was instituted, you saw a massive rush for what's called request for physicals, meaning the people who had these futures contracts on COMEX, where the paper is by far outnumbers the amount of physical available.
Yeah.
Right? It's highly leveraged. There's not enough there. If everyone wanted physicals at the same time, it's not there. You have a short squeeze, prices absolutely skyrocket. So what did these big trade desks do? They started saying, we want physical delivery for our clients. They don't want to do the normal settlement method that's done on the futures markets, which is let's let the contracts expire. Let's actually settle them in cash, right? So they can just go on to the next thing. They're actually requesting physicals. Why is this? Well, because if there's going to be a 39% tariff slapped on gold coming out of Switzerland, they don't want to pay higher prices down the road, right? So it's like, let's take the physicals now. So here's what happened. Over the 2 days that this happened, kind of over a weekend, it happened like on a Friday, the
Okay.
massive amount of price increases in both gold and silver was extraordinary because
39% is a massive tariff.
yeah, I mean, it's a massive tariff. And so people were wanting physical delivery. Now, consider this. When you have these big institutions that have futures contracts in paper that are highly leveraged, there's not enough physical. What does that mean? If they're getting request for physical and they don't have it, they need to go out and buy it.
Okay.
You can't deliver something that you don't actually have possession of, right? It's common sense. So where do they come up with the money? This was the big thing. It's like there were stories coming out, and you and I haven't talked in a few weeks, but there were stories coming out that said these banks undercapitalized already. They can't afford this. We're going to have a massive banking crisis, right? And so this is just one thing. This is not like more people taking withdrawals out than putting deposits in. This isn't some kind of subprime lending crisis. This was the delivery of gold, right? I mean, it's just one thing. that tells us how fragile these banks are.
And just to
Now,
confirm, the tariffs were put on both gold and silver in Switzerland.
it was only on gold.
Okay.
Silver already had problems. Silver already had well over a 300 to 1 paper to physical ratio. I mean, this has been going on in silver for quite some time. But when the eyes of the world start to be focused on the metals markets, I don't care if it's the focus is on gold or the focus on silver, they both start to rise. Right? So and what the eyes on gold exposed was the fragility of the banking system. I mean, so over the weekend, then Trump made an announcement. The White House made an announcement. We're going to put a clarification statement out on this Switzerland tariff.
Mm.
And then a day went by, nothing. Another day went by, nothing. Like, man, are they going to say something about this? What gives? Well, then Trump just made a simple announcement on his Truth Social account that said, we're not going to have tariffs on gold. And
Okay.
the whole world went into a frenzy and said, what? We were expecting gold and silver to go up. It's like, okay, have a little bit of patience. What this exposed was the fragility of the banking system and how there was this massive scurrying that there's going to be a liquidity crisis. They didn't have enough money to pay for the gold. So what Trump may have done was just simply expose the system, cancel that tariff on gold, knowing that down the road, this is going to be an ongoing issue, right? So to me, it's like, don't be dismayed that he actually canceled the tariff on the gold part. Gold and silver are still going to rise because of some other things that he's working on.
Which
Right.
are
So Trump is having win after win after win after win. And it's exciting to see. So the first thing I would love to say is a huge win was the Stablecoin Act and the Genius Act, right? So it's like, well, how are these have anything to do with metal, right? So if we look back, and you and I have covered this a lot, like
yes.
a dozen times probably, about the demand for the dollar is waning. It's going away, right? The rest of the world is de-dollarizing. They're dumping their treasuries. There's no demand. So much so that I begin to wonder when you hear the word stablecoin, which is basically a token on the blockchain that has US dollar backing. That's what a stablecoin is. Right. So it's a proxy for buying the paper versions of it.
It's
Right.
the same thing. Yeah.
Yeah. So, but put it into this perspective. What Trump just did was by issuing stable coins, he created demand for the dollar. Why? Because let's say you own Bitcoin or you have Solana or XRP or Ethereum or whatever. Normally, people who are buying and selling crypto, they're not going to sell their crypto and take their money out, go through the process of their coin wallet and putting it back in the fiat system at JP Morgan Chase. They keep it on the blockchain. So view a stable coin as the crypto version of a money market, right? When you sell something, it's going to sit on the blockchain and it's going to stay in the dollar. That should be stable, right? But when you look at the implications, the good ones, I mean, so when there's demand for the dollar is going away and it's down 10% year to date, how stable is that?
So what do you connect to the fact that crypto is booming right now?
Well, crypto is booming because it's this paradigm shifting moment where people are finally starting to realize, right? The generalized investor, not just hedge funds, not just big money center banks, are starting to realize, A, I don't think we trust the banks. B, I don't think we trust our government. I want to pull money out of the stock market, the bond market, out of the banking system and go into something that's decentralized, right? Yeah. Because so this is why I think crypto is going up. This is why gold and silver are going up. They share the same common fundamental forces that cause growth, which are, when you think about crypto, you think about gold and silver in their physical form. It's like, well, we want this because it's private, right? Decentralized blockchain, not centralized, right? I'm not talking about central bank digital currency. That's the opposite of privacy. when you have decentralized these different nodes communicating with each other on the blockchain, that should be private. Gold and silver are private. People want growth in crypto. People want growth in gold and silver. So the fundamental forces that cause their growth are the same. Now, inherently, they're completely different. One's digital, one's physical, right? So this is why they're both going up. Now, on the physical side, gold and silver, they're running out at the depositories. We've talked about this, but I just was talking to somebody at a massive Japanese bank, works at the trade desk. Said, Kirk, you know what they're talking about on LBMA, about COMEX running out of supply? It's actually true. It's hard to source
That's
large
crazy.
orders. I mean, and
Well,
this is from,
just a side note, I have a little bit of experience knowing that firsthand because there was somebody that came to me about a month and change ago. And he had a buyer that actually buys for major governments, like big countries and governments. And they were looking to buy a minimum of 5 metric tons of gold per day, up to 100 metric tons per gold per day of gold per day, which is like $7 billion.
Mhm.
They couldn't get it.
Yeah, you can't get it. It's like literally not there.
Yeah.
Right. So here's the issue that when you've got central banks that are buying it, this is why there's the supply issue. It's not like when a central bank is buying mountains of gold that they're trading it back and forth. It's never coming back to the market, right? They're using it to back up their currency. So supply is diminishing. Now, when you consider silver, the same is true, except add another layer of demand because it's not just a monetary metal, it's an industrial metal. It's used for manufacturing. So when I look at gold and silver, it's like which one is a better option? The one that has more demand, which would be silver, which is why it's now outperforming. So let's go back 2 weeks or so to what you just addressed, the Stablecoin Genius Act. So why is this such a big thing? So when you consider the Federal Reserve, going back to 1913, the Federal Reserve Act, money is created by this non-governmental institution, right? These private bankers that charge the US government interest, right? It's the biggest Ponzi scheme in the history of the planet,
Literally.
literally. But so you couldn't have private money, right? You had to use the US dollar. So we're still going to use the US dollar, but with the Stablecoin Act, it allowed for what I would, in layman's terms, say is the privatization of money in the sense of Tether, Circle, Gemini, Trump has one, USD one, PayPal. It allowed for private companies, private entities to issue stablecoins, or basically a token backed by the US dollar. Now, when you pull money out of Schwab, out of Merrill Lynch, out of wherever, and you're going to the blockchain, what did they just do? They created demand for the US dollar on the blockchain. So why not privatize it? Right? Which is basically what they did. It's like, it's not that the US dollar is privatized, it's still the US dollar, but it created entities that can use the US dollar in their treasuries and have it be the form of currency that was never available before.
Yes.
So what Trump just did is basically staved off a banking crisis, created demand for the US dollar when the rest of the world doesn't want it. Because now when you're buying and selling your Bitcoin or your Ethereum or whatever, you can go into these stable coins, right?
So
And
he's
that's where it
basically
sits.
he's connecting the US dollar to the next thing that people want, which is crypto using stablecoins.
Yes, exactly right. So that's one thing. That's one thing that he did. Now, also within these acts, you're creating demand for not just a stable coin backed by the US dollar, but a stable coin backed by anything, right? It's a real world asset token. So imagine moving forward. First cog in this wheel. Next cog could be what's another real world asset you could attach to a token? It's not just like fungible, tokens like art that people make these digital art pieces. How about real estate?
You could
How
definitely
about
do real
gold?
estate.
How about silver?
Grant Cardone just did that, tying it to a big purchase of like, I think 100,000 or something like that Bitcoin.
Yeah, absolutely. So you can tie it to Bitcoin. And what Grant Cardone is doing is you can buy big commercial properties attach it to a token, which then can be bought fractionally. So people can now invest in real estate on the blockchain with fractional amounts of money where, your family's
And I
been in
guess
real
that
estate
way
forever.
you don't need any forms of like regulations with accredited investors and whatnot.
Correct. Yeah. Normally these kind of things, these, direct participation programs, these big, hedge funds you don't have to be an accredited investor. You could put $50 into it, own fractional ownership in an office building in Manhattan,
Mhm.
right? So the world is changing right underneath our nose. Now, take it one step further. The executive order that Trump just signed, allowing this is the first time this has ever been available. This is why I think this is a big deal, is alternative assets being allowed in 401ks. Now, all of your viewers who have invested with us know that we couldn't do anything with 401ks. Now, if you left your company, we could roll it into an IRA. You could buy physical gold and silver that way, but not if you're still working. Not if you were under 59 and a half. You had the 20 or so options that were available to you that your administrator said, yeah, you can buy this growth fund, you can buy this bond fund, you can buy that, it had a selection. Well, what Trump just did, and this is probably going to go into effect, I would say, last quarter of this year, by
Right.
January 1st at the latest,
Right.
meaning you can now have real estate in your 401k. You
Really?
can have private equity in your 401k. You can have commodities. Now, this is the interesting language, either indirect or direct ownership of commodities. So I'm thinking, what's indirect ownership of a commodity? They already have that, which
What
would
is
be
that?
like a gold or silver ETF,
Gotcha.
right? So,
So you're
so
part of
what
like a fund.
yeah, some kind of a fund that like either a mutual fund that's tied to miners or a gold or silver mutual fund. But ETFs are indirect ownership, of the metals. But what's direct ownership? That would be like what you can do in an IRA, physical holdings. So when they use the language direct or indirect ownership of commodities in a 401k, what I think he just opened the door to was potentially you can have physical ownership of metals in your 401k. Now,
Wow.
let's take one quick little step back. It's like, what does this mean? So, I think when you have contributions going into 401ks every month, it's a portion of a person's salary. That's small potatoes compared to the massive 7 or 8 trillion dollars that are already in people's 401k plans.
Wow.
So when you have a new option that's never been available before, and your heart and your mind are saying, I've always wanted to do gold and silver. I've always wanted to do real estate. I've always wanted to do crypto in my 401k and I couldn't. What are they going to do? They're going to sell what they have and just reallocate. So I think this is going to put massive selling pressure on the stock and bond market, mutual funds,
It's
and they're
basically giving a lot more options for the
oh,
common person to be able to invest in other types of assets.
it's financial freedom for
Yeah.
the first time in these qualified retirement plans. So when you look at that, like let's say it were you or me, any of your listeners, and you had this 401k, it's like it's about stinking time. I've been wanting to do crypto. I've been wanting to do metals in my 401k forever. I'd never been available. It's never been available. So they're going to sell their stocks, bonds, mutual funds, go into those other alternative assets. So what is that going to do? It's going to be a huge demand boost for the alternative assets and a huge increase in supply of available stuff, stocks, bonds, mutual funds, lowering demand. I think the stock market gets hit hard on this, but it's kind of a zero-sum game. The alternative asset class, I think, is going to go up while the traditional asset classes come down. See, what Trump is doing is by his actions, he's saying, look, America, I'm hearing you. I'm giving you options, right? And the options, because of the way that the world is with the political, geopolitical conflict, everything else is, I don't trust the system anymore. I'm going to go to something different. This is the pendulum shifting moment that we've been kind of waiting for. Now, those are the fundamental forces. Fundamentals are things that are actually happening, balance sheets, things of that. Technical analysis is like looking at a chart,
Yep.
right? And it's like, is this a good buy point or sell point? How much open interest is there? How much volume is being, people who look at charts are technical analysts. For the first time in a long time that I can remember, the technicals and the fundamentals are married and connected at the hip and moving in the same direction at the same time, which is why when you look at, since the last time we spoke, silver broke through and rapidly a major resistance point on the charts, which is about $35 an ounce. So when you break through that and substantially, that old ceiling becomes your new floor,
Gotcha.
right? So this is where you'll go up and down, you'll trade back and forth, you'll break through a resistance point, that now becomes the floor. You trade for a while in that range, then you hit the next resistance point, you break through it, and that becomes the new floor, right? This is part of a bull market. So what we're seeing is we haven't, now that we're past this $35 threshold,
It's huge.
Jason, there is not much resistance until the old high on silver, which is $48 an ounce.
Yeah, is that where is the next resistance point up top?
There's a dinky one at 40 just because it's a nice even number,
Okay.
you know, but other than that, there isn't one until 48. And I'm not saying that 40 is a major resistance point. It's just an even number, 30, 40, 20, whatever. They all tend to be resistance points psychologically for some reason. But technically, there isn't one until 48. Now, once we get past 48, which the projections by economists in the industry are now saying, we're going to be there, we'll probably hit 67 to 75 by the end of the year. Because once you blow past 48, there is no more resistance points. It's never been higher than that. And so people would say, well, Kirk, why do I want to go into something where we're hitting all-time highs? Isn't that when you want to sell? Maybe. That's a good maybe. However, if the fundamentals that are driving it are, we're running out of supply. Sony, Samsung, Boeing, Lockheed Martin, they all need it, and there is no supply. The price is going to continue to go up. So who cares what the old high was? The new high, there is no limit to it because we now have something that we didn't have in 2010, the last time we hit that high, which is AI chips that need silver. You can't use copper on these high-speed chips. It would melt it. It would slow down the speed of data transmission by like 50 or 60%. Well, if you're a cryptocurrency miner or if you're in AI world, you won't settle for a 50% reduction in processing speed, or else you're going to lose out to the competition.
I want to talk about the proportions for a second because I think it's an important point where there's this running historical proportion ratio between silver and gold that we always speak about. And right now, I mean, last year, just about a year ago, gold was about 2400. Today, gold is about 3,400. So it went up nearly 50%, 45%. On the flip side, you have silver that last year was like $22 and now it's $38. So it went up nearly 80 or 85%. But still, the proportion, I know you keep saying that historically it's 1 to 20, if I'm not mistaken, right now.
Ish, in that ballpark, yeah.
1 to 80, which it's still there, even 1 to 90. So when do you see that proportion kind of rebalancing itself? Because that would mean silver should be $140, $150 an ounce.
Yeah. So I think we'll probably hit our first ratio trade, which you and I have talked about this. And if listeners want, they go back to previous episodes. We've had whole episodes on the ratio trade, but really, last time we spoke a few months ago, the ratio was over 100. It was maybe 102 or maybe upper 90s, maybe 98 to 102 to 1. Well,
Okay.
now it's 80. So since the last time we spoke, it's come down 10 to 12 points. I think by the end of the year, we're going to be in the 45 to 55 range. So here's the thing.
If you like 60,
yeah, I mean, we could do 60, but I think this is going to start moving so fast. When it moves really quick. So we could pull the trigger at 60, which means you're probably not going to get in until like 55 because it will be moving quick. When in 2010 and 11, the last time we had a ratio trade, we went from like 70 to 30 on the ratio in 9 weeks. I mean, and so what does that mean price wise? It's like, okay, Kirk, you're speaking gibberish. What does the ratio mean? What happened to the price? It went from 12 to $48 an ounce in a little over a year. I mean, that's a massive increase.
Huge.
But once silver hit the $35 that threshold that we just went through, it went from 35 to 48 in 6 weeks.
Whoa.
So this is where I don't necessarily care about the price. I care about the ratio. But for everyone listening, all you know is the price, right? So this is where the price really starts to move rapidly, and we're getting into that point because imagine back then we didn't have the demand. We didn't have electric vehicles in 2010. We didn't have these amazingly fast charging batteries for electric vehicles in 2010. We didn't have the demand for solar power in 2010 that we do now. We didn't have the military industrial complex blowing everybody up on Earth, with missiles and torpedoes that need silver. I mean, there's just so much more demand that I don't think we can quite fathom where this is going to go. Because let's say we're in a war economy.
Okay.
Are Boeing and Lockheed Martin going to say, we'll just stop producing missiles and torpedoes? No, they're going to pay any price possible to get the silver that they need.
Yes.
And if you own the metal, you get to sell into that strength. Do you think Tesla is going to stop producing electric vehicles because they can't get silver? And there isn't really another alternative. You can't use copper. It doesn't conduct electricity quick enough, right? Or all the robotics industry. No, they're going to use what's fastest and what's best. Now, you technically could use something like platinum.
But that's even more expensive.
Or you could potentially even use gold. It's not as good as silver. Neither one of those is good as silver, but let's use platinum. Well, okay, so let's say you could replace it with platinum. Silver's $38 an ounce. Platinum's like 1,000.
1,300.
Imagine what that would do to the price of everything. They're not going to do that. They're not going to do that. Because they can't. It would price it out of competition. Nobody would buy your stuff. It would create a huge inflationary recession. They're not going to do that. So therefore, they're just going to keep paying for the silver. And let's just say, well, we'll pay $80 an ounce. Okay, that's much better than 1,000, right? Well, we'll pay $100 an ounce. We'll pay $150 an ounce. It doesn't matter. There is no better option at this price level. And this is why we have been so ahead of the curve. When you kind of look into the future a little bit, I'm not saying that we're futurists. I'm just saying we're following the trends.
Yeah, it's working.
It's working, right? And so allocate into that strength, because if you own at a time when the producers and the manufacturers of the world need it so badly, you sell into that strength. Because what's the goal of investing? To buy low and sell high, not to hold something for the rest of your life. That would be a collector. We're not collectors.
Yeah.
We're investors. And so at some point, we'll lock in profits in silver, we'll roll it into gold.
What ratio do you want to do that ratio rate at?
I think we'll have to do two of them.
Okay.
We'll lock in at that 45 to 55 range with the target we start when it's 60. And the last one will just be at the bottom. We don't know what the bottom is going to be. Is it going to be 30 like it was in 2010, 2011? Is it going to shoot down to 20? It's more long-term average. Or is it going to be 35? I don't know. But when it signals, when the markets, when the demand, when the supply signals this is about over, that's when we do the last half of the ratio trade. Then at that point, we're 100% into gold.
Gotcha.
Now, let's say we're 100% into gold for a while. Then what?
Yeah, what do you do after that? Would you at some point go into the stock market?
Maybe. I mean, it's an option, right? Because we don't know how effective Trump is going to be on all this stuff. I think he's going to be very effective. But let's say he starts generating jobs again, bringing jobs back to America because of the tariffs. Foreign goods are more expensive. People are going to be buying American. Jobs follow manufacturing. So when people are working, people are spending. When people are spending, corporate profits go up. So that would mean stock market should go up. What if the inflationary pressures get so high because Congress is being idiotic right now when we've had more revenues from tariffs than we thought possible, but yet the deficit spending is at the highest point ever. It's like, and that part's not a Trump issue. That's Congress passing spending bills that we don't have the money for. So Trump is doing his job in creating revenue for the country. Congress is now taking that revenue and spending even more. It's like old habits die hard, Jason, and they can't stop spending. So now we've got these inflationary pressures, which is why Jerome Powell says, I can't lower interest rates with these pressures. And Trump is saying, look, lower them a little bit. We're very uncompetitive. Europe has had 8 or 9 rate decreases since we've had our last one. You're not caring about the American consumer who can't afford to buy a house right now because the mortgage rates are too high. So you lower interest rates some, you stimulate the economy. That stimulating of the economy will get more people working, and we can fund things like the big, beautiful bill and things of that nature. Now, the political headwinds that Trump is facing, they don't want him to succeed. By they, I mean the globalists, the international bankers. They don't like that Trump is upsetting the apple cart so much that there's this paradigm shifting moment away from old traditional assets into new assets. They don't like that because they lose power, they lose control. So he's got these headwinds, and who's going to win? I think Trump is going to win, but I think there's going to be massive turbulence between now and then, right? So here's where we've seen this battle of Trump and Powell, and Trump saying Powell's an idiot, he's a moron, he's slow Powell, he has names for everybody, right? But he's right on this one. Powell needs to lower the interest rate. And Powell says, I'm not lowering the interest rate, and you can't fire me. Congress can't fire me. It's like, what kind of amazing job security is that where not even the president can fire you, right? Yes. Unless there's fraud or some kind of malfeasance of some sort, then you can get him out. But so Trump, somehow, some way, a miraculous thing happened, and I don't know how. But the Federal Reserve Board of Governors is 7 people who vote on policy, lowering interest rates, raising interest rates, lowering the money supply, raising the money supply. This is the Board of Governors. One of them, Kugler, decided to resign last week. So it's like, what's she going to do? Well, she's going to go back to be a professor at Georgetown or something. It doesn't matter, right? So now there's this open seat. So who did Trump say is going to fill that open seat? Well, the chief of his Council on Economic Advisors, the main top dog, is going to fill that. Who wrote the Mar-a-Lago Accord on the devaluation of the dollar, very much pro-tariffs. So now you might have the deciding vote to lower interest rates. So in a weird sort of way, it's like, all right, Trump is kind of saying, maybe I don't have to focus on Powell. We've got the votes that we need. We might have the extra vote to lower interest rates. So no matter how you look at it, we're winning. Now, what else did we vote for when we voted for Trump? Whoever voted for Trump, anybody that voted for Trump wanted something. What was it? A change in the way that things were operating, more transparency, more accountability. So what did he just do? Like a week and a half ago, he fired the head of the IRS, right? And so who replaced him temporarily? Bessent, the head of the Treasury Secretary, is now the head of the IRS temporarily. It's like something is going on. Something big is happening. Trump is bringing power back to the people, getting rid of the old guard, getting rid of some of the old systems. When you see that, the IRS, when I think about it, has nothing to do with revenue generation. We don't need to pay taxes when we have a printing press.
Yeah.
I mean, you truly don't. Just use the printing press. Use money supply to pay for all of your bills. But yet they decided we're going to do both, back in the day. It's like we're going to print money like there's no tomorrow, and we're going to charge taxes. Right. So part of
It's a
Trump's,
mafia, man.
it is. And part of Trump's idea was, hey, let's get rid of taxes altogether for people that make less than $200,000 a year. At what point does the IRS become irrelevant? At what point does the Federal Reserve become irrelevant? Trump is kicking tail and taking names step by step by step. Now, when you do that, you upset the apple cart because there's power in control, right? When you can control people by the feared IRS label, it's like, we're going to audit you, right? It's like, okay, that's control. And Trump is getting rid of that, which is, to me, financial freedom. To me, this is all part of the bigger picture of political, financial, economic, moving away from the things that were. This is so bullish for precious metals, can't even explain it. As a company, I've been doing this since like 2002. We've got a very large firm, right? Like massive. And it's just God's blessing on us. But the busiest I've ever seen this industry was not 2010 and 2011 when silver went from $12 to $48 an ounce.
Mm-hmm.
It was during Silicon Valley Bank collapse. That was the busiest.
Remember that?
Yeah, it was wild. Because when people fear that they're going to be divorced from their money and from their bank accounts, they start to make moves and getting away from that system, going into tangible assets. That the busiest I've ever seen.
I remember that there was another bank. Which one was it? Signature Bank?
Signature Bank, Credit Suisse,
That's the
First
one that we were
Republic.
partially in as well, and we had to move.
I know. I remember that. It's like, oh my word, poor. I mean, your assets were like gone. So yeah, there was like 5 regional banks that failed then. What we're embarking on now as a company is the busiest time since Silicon Valley because of everything that we're talking about. And now we've also got these weird geopolitical dynamics of, are we behind Putin or are we behind Zelensky? Right? Or what about with Israel? Are we going to support Netanyahu? Or are we not going to support Netanyahu? Is that battle between all these terrorist countries or Palestine or these organizations, Hamas, Hezbollah, all of them against Israel, and now other countries going against Israel? It's like, who are we going to support there? And are these battles ever going to end? Is the battle with Russia and Ukraine ever going to end? Now, Trump just met with Putin in Alaska.
And Zelensky.
And Zelensky too. And the most recent news is we're going to provide security to Zelensky and Ukraine. Well, what's that going to do to Putin? He's going to get ticked.
Yeah.
Right? It's like, so the economic ramifications of the political process are going to wreak havoc on the market. Well, then we also don't know what's going to happen with China, Taiwan. We don't know what's going to happen with Japan. Japan's economy is falling apart. The Japanese yen is cratering so fast that they're now having to raise interest rates, which means the Japanese yen carry trade is over. That's what's caused the global growth since the 1980s. Well, if that's no longer there, who is going to fund the global growth of the economy?
Yeah.
Well, maybe it's going to be the US dollar. Maybe if we can get interest rates to come crashing down because we now have a stable coin, you don't have to, and you create more demand, maybe it could be the US dollar carry trade, right? So there's some things that we just don't know, and we can't even pretend to know. But what we do know is if you want to maximize your future, you have to maximize each and every day. Don't try to be a soothsayer. Don't try to be a massive market, forecaster.
Yeah, you'll never get it.
You'll never get it. But what you can get is safety and security and better growth if you maximize each and every day with the information that we know that's right underneath our nose. The only way to maximize your future is to maximize every single day. What do we know that's working today? Gold and silver, right? Doesn't mean we're going to own it forever. Means we're going to own it for now until the transition changes, lock in those profits, roll into something else. See, it's not that hard to have a smile on your face in the midst of everything that's falling apart because you don't have to think 3 years, 5 years, 10 years into the future. You think about right now, allocate into that strength, and that way you can have a promising future if you maximize each and every day.
So for anybody that does want to move forward, who hasn't yet, or wants to just maximize further in terms of investments in gold and silver, probably more so silver right now, before you do the whole ratio trade and whatnot. What do you think? And I know you can't guarantee anything, but what do you think they can expect in terms of the journey over the next 4 months between now and January 1st for those who want to go and invest with you right now?
I mean, yeah, with the caveat of I'm not God, I don't control the markets. I'm just looking at the trends,
Yes.
looking at the economists that are projecting where we're going because of lack of supply at LBMA and COMEX. I think, and this is the same number that I had at the beginning of the year. I think we'll be 67 to 75 by the end of the year. Then in 2026, we'll probably hit the low 100s to 120-ish on silver. It's just a function of supply and demand.
Do you
Take away
think
all of the noise.
Do you
This is
think it's
just a
going to
function.
be, other than looking at the end goal of, let's say, January 1st, 2026 for the first, benchmark of what we're talking about, do you think it's going to be a very volatile journey over the next 4 months, or do you think it will be steady kind of growth? Meaning, can it drop back to 30 and then fly up to 48, 50? Or do you think it's kind of going to keep going up the way it has been and be stable?
Expect volatility because the higher the prices go, the more short positions that could actually destroy banks become problematic. So there's going to be selling pressure during that times and the price goes up. And so you'll see some volatility. But no, I don't think, remember, every time we hit a new milestone, that becomes the new floor. So I don't think we're going to go back to 30. I don't think we'll see the 20s again. I think, the new floor might be 35, 36, which
Gotcha.
is only a
Yeah,
few
that's
dollars
kind of
away
what,
from
I
where
mean,
we are
it went
now.
to like 36.70, things like that over the past
Yeah.
couple of weeks, few weeks, but it just keeps bouncing back.
Yeah. And I would encourage everybody that's watching, don't pretend to be a market timer. I'm not. I'm not that smart.
You
Right?
can't time a market in a world where there are people manipulating things.
No, you can identify trends and allocate into it. But thinking, I mean, I just got off the phone with a client prior to us getting on this recording. They said, Kirk, should I wait till tomorrow to buy? It's like, why? What if it's 20 cents more or 20 cents less? Are you really going to care
Doesn't
based
matter.
on where we're going? It doesn't matter. You said, well, I heard from X on some podcast that it's like, yeah, we're going to hit this. It's like these people aren't in the business. They're not in the industry. They're just talking heads. Don't listen to everybody that you hear. Hear me on that. You can hear them. Don't listen to them if they don't really know, right? But to me, I almost like dollar cost average. I don't care what the price is. Every time, every couple of weeks, like clockwork, adding more into silver. And I don't care what the price is because I don't care if it's 34, 35, 37, 38, $40 an ounce. When where we're headed is going to be so much more, I would rather be like what we've talked about before. I would rather be 6 months or 9 months early than one day late.
100%.
And allocate into that strength. And don't look at gold and silver purchases as only growth. That's one component of it, which is an amazing component. Don't get me wrong. But the other part is insurance policy against a collapsing currency. The purchasing power that you maintain by going into a tangible asset, it almost makes the price irrelevant because the dollar keeps coming down.
100%. Well, with that, I want to remind everybody, for those of you who have not yet reached out to Kirk or his team, and I highly recommend you do, because what I always say on these shows is it's not just a regular broker you're dealing with. They're people that are more conscious oriented, spiritually oriented. They deal with you in the way that I would want to be dealt with. And I know that because I deal with them personally. So if you do want to learn more about this, and I always say you have nothing to lose, everything to gain. Worst case, you make a call, you ask your questions about 401k, RIA, IRA, how that whole thing works in terms of rolling it over. Worst case, it doesn't work for you. Best case, it does. But even in the worst case, you learn something new and you see what's out there in terms of your options. And options are really what we need right now in terms of moving
Yeah.
forward, maximizing potential in the world that we're moving into right now. And there's a whole lot of it. So if you are interested in learning more, if you are interested in investing with Kirk and his firm for your future, make sure to use the link in the description below this video, fill out that form. They will set up a call with you right away and you can take it from there, and always leave your feedback, because I like not only knowing it myself, but I like when people leave comments on their experiences with Kirk and his team, almost like a review, so people can see what was their experience like, so other people feel more comfortable moving forward. So with that, Kirk, I'll leave you with the last word, the final word over here before we close up.
Yeah, I mean, I think that was a wise ending to what you just said, right? It's like, obviously do your homework. Don't ever do anything that you're uncomfortable with doing, but follow your intuition. Follow that inner voice inside of you. It's like, I know that something's wrong in this world that we're living in. I know that there's things lurking in the shadows. I know that things are being hidden. So when that's the case, you never know how long things are going to hidden. All I know is that light always exposes the darkness. And at some point, we're going to see truth manifest itself in a big way, and you're going to want to be on the right side. I would allocate into tangible assets, which are real. They're not hidden. They're not numbers. They're not digits. And protect and preserve and grow and thrive. Don't settle for anything less. And we'll help you walk through that. This is what we do.
I love it. Again, use the link in the description below this video, fill out the form to get in touch with their team, and always leave your feedback. Kirk, I want to say thank you very much for your time, and I'll see you again in a couple weeks.
Sounds good. It's my pleasure. We'll talk soon.
Thank you.